Good afternoon, everyone, and welcome to Arming the Masses for Cloud Delivery, which will review high-level findings from our Cloud Components benchmark. I'm Allison Crawford, and I will be your host for today's session. Cloud is disrupting the business model for many traditional IT providers, but the underlying fact is servers, storage, networking, and software are still requirements for cloud delivery. TBR's Cloud Components benchmark helps vendors understand this evolving market, anticipate customer requirements, and react to competitive strategies in a market which will reach almost $40 billion by 2018. Over the next hour, we'll delve into the drivers of this business model, followed by Q&A of what this means for your business. Before Alan and Christian get started, I'd like to cover some housekeeping items. First, we're recording today's session and posting it on our YouTube channel, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Alan and Christian will address them at the end of the presentation. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out to either them or myself at the end of the presentation to set up that conversation. Third, we'll send up the slides to everyone registered for today's webcast within 24 hours of the conclusion of the presentation. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, and we'll share all the social media links with you again at the end of the presentation. Now let me introduce Principal Analyst Alan Krantz from our Software and Cloud practice and Content Manager Christian Perry from our Data Center team. Alan has been covering and writing with the software market for over 7 years and is leading our research coverage in cloud. Christian has been covering data centers for more than 20 years and leads our research in that area. And with that, let me pass this over to Alan.
Great, thanks Allison, and thanks everybody for joining today. So as we got started with today's presentation, really I think some of the biggest takeaways, and this comes from not just our views into the cloud components space, but what's happening with cloud overall, is that the assets and the skills and the tools for cloud delivery are really broadening within the market. It's no longer simply a pure cloud play where the largest public cloud providers are the largest consumers of these tools and assets and processes. What's happening as the market shifts to more private cloud consumption and hybrid cloud consumption is that you're seeing the same type of requirements and needs in terms of operating cloud data centers at scale move from just that small set of cloud providers to a much broader segment of the market. And that includes a couple of different categories, starting with a lot of the large cloud service providers. These can be SIs. They have legacies in terms of sometimes running data centers and hosting, but overall have a different set of requirements and tools that are needed to shift that model to being a cloud provider. Secondly, you have a set of ISVs that have done traditional software delivery for some time or maybe haven't, but have a core set of IP that they want to provide a multitude of different delivery options, cloud being included in that, and so either need to build that themselves in some cases or work with partners to be able to provide that option to the ultimate customers and consumers of their applications and software that's being developed. And then the third category, which is one of the largest opportunities in terms of the size of the market today, are those large enterprise customers that want to build their own private cloud data centers, either transition existing assets or build those environments from the ground up to be able to get all the benefits of cloud, but do in a way that they're building, owning, controlling, and maintaining it in those environments. So that diversity is not one that we've seen, yet in cloud. Still at an emergent state, but I think there are more options, and we've seen more adoption in the areas of private cloud and ultimately getting to a hybrid type environment that's driving the market from a cloud services perspective. And so with today's presentation and a lot of the research views that we'll provide, really takes a look at behind the scenes, what are the requirements in terms of the levels of investment, the types of hardware and software solutions that are needed to enable that new set of cloud providers, really looking to arm the growing masses of customers and service providers that all of a sudden now go beyond just the traditional delivery methods and really need to be able to run cloud data centers. And so the good news is that for the traditional IT providers, these are a lot of the same types of assets that have been delivered through traditional means in the past. The requirements for storage, servers, networking don't go away, and that this new class of buyers is driving significant opportunity in terms of being the arms dealer for this emergent class of cloud providers. And so with that good news also comes a number of challenges, because unlike the large public cloud providers that have driven a lot of the hardware and software requirements to date, these are not customers that are proficient in terms of running cloud data centers, taking raw assets, building their own custom software to make it all work. These are not competencies that a lot of these customers and clients will have, and so it brings a different set of requirements in terms of the tools that will be a match for the solutions that they're ultimately looking for. And so as we go into the first part of today's presentation, really I think the opportunity for vendors is in helping those customers overcome the hurdles to getting up and running, really building cloud data center proficiency in terms of being a provider of these services, and that's something that has different stages of growth that we see as we go through the market. So to kind of take another step back and look to reinforce why is this market so important, how does it fit into the landscape of all the different IT segments that we cover here at TBR. So when we look at the objective for most of the providers that we cover, this is across the traditional landscape as well as cloud, really growth is at the core of their objectives as an organization. Being able to demonstrate above average growth, above the overall rate of economic expansion, which if we look at the U.S. over the past couple quarters, really ranges in that 2% area in terms of the overall pace of economic growth. And you can see across all the benchmarks and the vendors that we cover from a traditional landscape, really most of the core IT markets settle out at or below that 2 to 3% range in terms of growth. Those are not numbers that are going to excite investors, allow them to expand the size of their business at a rapid pace going forward. And so this is where cloud becomes more and more important at enabling that above average growth. Public cloud, even though it's the largest and most mature cloud segment, still growing at significant rates. And you can see the illustration of where private cloud is really picking up in terms of the overall rate of expansion and the number of customers that are able to adopt and expand their investment in that area. And then finally, when we looked at the cloud components market, what we've seen is growth well above what the public cloud providers are driving in that 20% range. And it illustrates the growing number of customers that have requirements to operate cloud, that need to procure traditional IT assets to do that, and that's driving current triple-digit growth in terms of the consumption of what largely are existing IT assets, but being used in a different way to deliver cloud and not just to deliver traditional IT provisioning. And so it's an important growth market for all of the players in the traditional IT space, and one that has been largely untapped in terms of, if you look at the way that a lot of the public cloud providers have grown their revenue streams and operated their data centers, hasn't been an opportunity for the traditional IT providers. Certainly we see the cloud components overall as a growing space where you can take existing assets, leverage them in a different way, yes, differentiate and add value on top, but largely it is a business model that a lot of the traditional IT providers are comfortable with, have been successful with for quite some time, and that transition over to the cloud side is a logical extension and growth opportunity for them. So as we look at the different stages of the cloud components growth, and really what's going on within these markets at a high level, when we start with last year and look at what's nearly a $22 billion market, the components of that are largely made up by traditional infrastructure building blocks and core virtualization assets. So if you think about the mixture between the public cloud providers, the different tiers of private cloud providers, to a large degree, this was core data center assets, much more hardware focused than we expect to see for the market going forward, as really kind of the masses, if you will, are opened up to consuming cloud components, using them within their business model. We expect the mix to change significantly going forward over the next 5 years as a result of the different actors and the different customers that are involved in driving the overall opportunity in this space. Because just running the core data center is something that, for the public cloud providers, that's where their needs are. But as these large enterprise customers, as a new class of ISVs come in and really need to not just run the data center, but run the business of being a cloud provider, we see much more focus in terms of the orchestration, the provisioning, the metering, the invoicing, in terms of automating that process, providing a business outcome for them, and that's largely going to be a software asset that they're consuming from third-party providers. A lot of the existing providers have been able to use their own developers to build those assets. New customers are not going to have the resources or really the need to build it themselves. They'll take a prepackaged solution and be able to focus on their value add in terms of the applications or services that are ultimately being delivered to their end customers. So much more of a shift to going beyond just running the data center, optimizing it, and then looking for those continuous business benefits in terms of the business side of it, the security, we think are increasingly important as you go forward, building on top of the core hardware and virtualization type assets that got customers started on this journey to being cloud providers. So we've talked a little bit about behind the scenes in terms of the cloud component side, the overall size of that market and the changes going forward. Here we're illustrating, from the front end, a lot of the changes that are going on in terms of what types of services are ultimately being consumed by customers and are driving the growth that we're seeing and predicting in terms of the cloud component space. So you can see public cloud remains the largest opportunity. It's the slowest growing cloud market if you look at the different segments that we cover, but still expected to remain a significant area of cloud consumption, and thus the core hardware and virtualization requirements to deliver that. And I think the more important part is if you look at the private cloud market, how that's really, so we started tracking that a couple of years back, looked at a space that has evolved tremendously over the past couple of years and now grown to really close the gap in terms of the revenue opportunity for delivering those services. We don't expect it to overcome public in the near future, but certainly will become closer on par with the size of the public market, driven by the dynamics in terms of just more security requirements, more performance requirements, customers that want to build their own environments and don't want to outsource certain elements or any element of their IT environment. Those are things that are going to sustain that market going forward and play into the growth that we expect to see on the cloud component side. The other driver we see is this hybrid integration space, where being able to integrate, optimize choose a mixture of public and private delivery methods based on the workload is really where most customers want to get to. And that is going to drive both an opportunity in and of itself, but also create additional growth on the private cloud and the public cloud side as customers are really able to better choose, but also integrate and get the benefits of central management, central data storage, tying into big data from that respect, and that largely those needs have been unmet in the market today. But we have seen significant trialing and testing among large enterprises. In fact, 20% of large enterprises that we recently spoke with have some investments in hybrid integration, and that's going to have implications as we go forward on the cloud component side, and one that's going to drive additional growth in terms of the usage of private cloud assets that really are the core of the opportunity for the components growth going forward. So here we get a little bit below the covers in terms of that overall, $20 billion opportunity last year, growing going forward. And you can see the mix changes as we go forward, where on the bottom of the chart, those are the core hardware assets that compose, a majority of the opportunity size today. And really that's a reflection of, if you look at the public cloud providers, yes, they're not building their own hardware. They need to procure those assets from a third party, and we can track and analyze that as part of this study. But for a lot of the software technology that's being utilized to run these data centers and to deliver these services, it's largely a internal developer-led approach, and one that is tough to measure if you look at the external benchmarks that we're looking at. Just to give you a little bit of flavor for some of the investigation we've been doing in terms of sizing that effort and really, providing a more complete view of both the internal effort as well as the external spend for cloud components. If you look at the largest handful of cloud providers, Microsoft, AWS, Salesforce, their cost of sold for cloud services is roughly in the $5 billion range as of last year. So when you start to decompose elements of their investment and what's headcount and what's external spend in terms of components, we feel pretty comfortable that you're looking at least $1 billion spend in terms of the software development effort to operate those data centers. Could well be in that $1 to $2 billion range. And so when you add that in, it provides a little bit more complete view of just the people hours in terms of developing that software, operating the data center, doing all the maintenance. So fairly significant internal spend that kind of rounds out where the market is to date. But as we track it, that's going to be changing going forward, because you're going to have more customers that won't be building their own software assets to run these services, that are going to be looking for third parties to provide that. And that's what's going to drive a lot of the growth and the mix change for cloud components over the next couple of years. So overall, better news for software vendors than it has been in terms of the opportunity to productize the processes for running cloud data centers, delivering those services, and optimizing that process for customers. It's going to be more externally focused than it has been in the past. So with that overview, I'll hand it off to Christian to go through some of the hardware implications as we look at this space.
Thanks, Alan. So Alan talked about several of the dynamics that we're seeing in the cloud hardware space, in the software space as well, in the overall cloud components ecosystem. And currently we do see that hardware infrastructure is the primary growth driver for cloud. But that's a dynamic that's going to shift over time. So as more cloud deployments occur, we will start to see more growth on the software side. We see a couple of reasons for this. So first, the initial outlay of hardware in terms of cost certainly will be highest over the lifetime of a cloud deployment. So it's that initial outlay. In most cases, unless you're talking about a substantial or a full overhaul of the hardware at some point over the lifetime of a deployment within an environment. So also we do see that hyperscale hardware will be used increasingly for cloud deployments, even in the enterprise space. We see this coming out of our hyperscale research, and once these deployments happen, upgrades will be more incremental rather than more of an overhaul type or a complete upgrade that we see with traditional hardware upgrades, such as in the rack and blade server space. For the time being, though, most of the dollars being generated are in hardware to, again, build those initial environments. We do expect that growth will continue here in the short term, and you'll notice here that networking was the year-to-year growth leader in the third quarter. This is something we expect as cloud environments can continue to expand both in size and in scope around workloads. So more data flowing, of course, means a larger need for expanded network infrastructure. So that explains what you're seeing here. So when we look at the components landscape by vendor, you'll notice that the two revenue leaders have relatively strong software penetration in the cloud market, and that's HP and IBM. It's also interesting to note that if you combine two of the federated businesses that you see here, EMC and VMware, you would see a nicely balanced portfolio of hardware and software that puts the two combined companies right up there with IBM and Cisco. Looking at IBM in particular, and thinking back to the prior slide, the ratio of hardware to software will likely shift over time. As IBM focuses more of its portfolio on software, and of course assuming that Lenovo's acquisition of IBM's x86 server business does get approved later this year or even as soon as later this summer, that shift will likely not only be dramatic, but will cut into IBM's overall standing as a components revenue leader. HP, for its part, that's an interesting case because the overall shift from hardware to software in the component space may not happen with HP as it happens with other vendors. And for that, we're looking squarely at the joint venture with Foxconn, which will likely mean that HP will be an even larger hardware components provider for cloud, assuming that that joint venture heads in the direction that HP wants it to head and that it's successful. We expect it will be. And as it continues to expand its presence with off-the-shelf hyperscale hardware, such as Moonshot, such as Proline SL, that hardware growth will continue. So outside of the covered vendors that, I'm on the wrong slide. Okay, so looking at the hardware revenue growth versus corporate revenue growth, it's no secret really that data center hardware vendors have had some tough times over recent years. Commoditization is having a massive effect on the data center hardware market, but the more that these same vendors look to expand into cloud, the more opportunities that they'll have to grow overall hardware revenue. As you'll see, companies such as HP and Cisco seeing cloud hardware revenue growth rates of 30% or more, as you see here on this chart. That's way beyond what we're seeing on a corporate level. On a vendor-by-vendor level, that cloud hardware growth, it does exceed corporate revenue growth, of course, all except for Oracle. So we do believe that Oracle is continuing to be challenged when working to apply its investments, apply its some of its other efforts around its portfolio and sales to actual cloud growth on the hardware side. The interesting thing here is that Oracle is finally for the first time, making some progress with its engineered systems in terms of sales. So if that continues, I do think that Oracle will have an easier time integrating hardware into the overall, into its overall cloud sales efforts. Now, as far as Fujitsu goes, its place over here isn't a reflection of its cloud business, which is middle of the pack in terms of growth, but rather its overall corporate performance. And there, the depreciation of the yen compared to the US dollar had the biggest impact that we saw. And Fujitsu overall, not just with cloud, but overall is struggling to expand its business outside of its home market of Japan. So outside of the covered vendors that you see here on the right, we continue to see plenty of growth among the remaining players in the market, and those are primarily ODMs, as they serve as the primary supplier of hardware to those top-tier cloud data centers run by Facebook, by Google, Amazon, Microsoft, and a few others. Over time, though, we do expect to see this growth even out as the expansion of those big data centers starts to slow, and also as the penetration of enterprise data centers by OEMs with their cloud equipment, their cloud hardware increases. Keep in mind that there will be a larger OEM presence in that same space, moving forward, in that same space where ODMs play. And that will be primarily driven by HP, along with Dell, DCS, but HP with its relationship with Foxconn to build those low-cost, those highly scalable servers we expect to see coming out of that joint venture. And then outside of that, we will see more cloud hardware being deployed in enterprise environments. In our hyperscale research, we did see and are seeing enterprises deploying hyperscale servers to handle not only cloud workloads like hosting, cloud hosting, but also for deployment of hybrid clouds. So again, we'll see this growth that you see here even out over time, or at least approach an evening out level. And now I'll hand it back over to Alan to talk about software assets and how they'll impact support delivery.
Great. Thanks, Christian. So in the last section, we look at the impact from the software perspective in terms of the types of services that are required and the areas of expansion going forward. Because I think when we think back to the run, optimize, secure type hurdles that customers are going to be going past, this is really defined by the software categories and the services that are going to be required to get them there. So I wanted to start the discussion with kind of an overview and a perspective for, again, from the customer perspective, what are the types of needs and requirements that exist in terms of the IT assets and the cloud assets that are desired to be consumed. Because we've seen, starting with public cloud, it was not only a technology shift for the market, but also a purchasing and a behavior shift in terms of the access to certain assets, the way that they were procured and purchased, and that a lot of that, while the technology may be shifting over to a private or hybrid environment in terms of what the capabilities are, that behavioral change that started with public cloud adoption carries through and really focuses back on what are the outcomes that are enabled by these types of investments, and who are the right providers of those solutions. Because it's no longer just an IT decision, it really is one that ties in what the ultimate return, and that's not just measured in terms of the cost, but also the business benefits that are enabled by it. And so we think hybrid really creates more capability to cater to these types of buyers than ever, and that it's going to drive growth not just in hybrid, but also in public and private going forward as this pendulum shifts back across those two markets. So to illustrate a little bit more, and so this highlights, some of the different areas of spend in terms of the private cloud. But overall, the key takeaway from this slide is, if you look at these different types of buyers and their personas, starting at the top, there's those that want to build and buy outcomes. So much more of the outcomes-focused purchaser. Public cloud was a great fit for a lot of those types of customers and workloads, and that's what's driven the growth in those services over the past decade. But there's a gap in terms of catering to this own and control, someone who wants to not see the entire responsibility and management maintenance for IT services going forward, but either wanted to continue to control everything or cede a portion of that responsibility in terms of getting the payback from the flexibility, the cost savings, the improved operational efficiency that cloud can deliver. And so what we've seen is public cloud was largely not a fit for those types of customers or those types of workloads, and the private cloud has filled a gap, specifically the self-built private cloud, where large enterprises are coming in and retrofitting or building their own new environments for cloud delivery. And it's been one that's driven significant opportunity already, just because of the financial dynamics of making those decisions and investing into your own data centers, owning and maintaining that yourself, more upfront commitment in terms of those types of investments that drives a lot of the sizable opportunity for the IT providers in this space. So good perspective to keep in mind as we look at why private cloud is growing and the types of customers where it's really been a good fit so far and has driven a lot of the adoption today. So here we look at, so we've kind of took a customer view on the previous slide. Here we look at, from a workload perspective, the types of services that have been moved to private cloud and those that are intended to be moved to private cloud going forward. Because it really illustrates, when we look at the growth for these types of solutions and private cloud delivery, where a lot of that expansion is going to come. Because what we've seen is the big workloads that have moved to date have been more horizontal, more focused on compute, storage, networking, some around, HR services, which we've seen a big uptick in terms of public cloud adoption. If you look at the businesses for things like Connexa, Workday, that's really been a second tier of growth beyond CRM. But that a lot of them are becoming more commoditized in other areas of the stack. And that for the workloads on the top that we see that are deeply rooted within the organization, that have largely interconnected workloads to other services, other pools of data, just a lot of very active, high-intensity workloads on the top, that if you look at the length of the arrow going forward, certainly the intent and the desire is there to move those workloads to a private cloud environment. But that in order to do that, the requirements and the levels of investment are going to be much more significant than some of the horizontal workloads that we've seen move to date. And so that really underlies more of the large enterprises adopting more deeply in terms of private cloud in order to target a lot more of the business-critical, mission-critical workloads that have consumed a lot of the IT spend historically and will be big drivers in terms of the private cloud and the components growth required to do that going forward. So I wanted to end up with a vendor view in software and kind of talk through some of the different categories that we're seeing today, but also some of the changes that we expect to see going forward as this remains a very emergent space. I think, for some of the views on hardware, there's much more of a pull from the legacy. The leaders have been, the roles and the leadership positions have been more established. With software, we believe we're at a very early stage in terms of the overall maturity and growth. But then as you start to look at, first today, who's really standing out and why is that occurring, certainly we see VMware as the overall leader in terms of the software presence today. And there's a couple different reasons that we see for that. First is if you look at the stage of the software maturity, their proficiency and legacy in terms of being a virtualization provider lend itself very well to the migration to a private cloud environment, and that virtualization layer is a key component and one of the biggest revenue categories that we're tracking in terms of the spend and the investment for customers making that transition. But also, they're a player in the higher value areas of the software stack, that being a provisioner, meterer with the vCloud suite is an area of proficiency for them. So they're one vendor that we think is very well positioned both today to capture the virtualization requirements and infrastructure management requirements for cloud providers, but also to extend beyond into the business-focused operational side as customers mature and really look to increase the efficiency of running cloud as a business going forward. The other kind of group that we see is a big, legacy contingent in terms of having core infrastructure management assets. Certainly, I think VMware fits in there to some degree, but also IBM and CA, which have an early lead in terms of providing the core operational software and services that are needed to run an efficient cloud data center. And that's something that largely pulls from a legacy existing portfolio, but shows how that bridge can be made to cloud. And certainly we see other vendors like EMC moving in that direction, actually, not as big as some of the other providers, but growing at one of the more rapid rates if we look at the actual rate of expansion on the vertical axis. Let's see, one more call out. If we look at a vendor like Microsoft, I think one of the other element that you see in terms of who's leading in this market today on the software component side is the focus on the large enterprise. So as private cloud adoption has grown, we've seen it largely be really skewed in terms of the larger customers or those that are investing more aggressively, have bigger budgets overall, and are deriving more value from private cloud delivery than some of the smaller, more mid-market focused customers in this area. And so certainly a company like Microsoft that just does not play to their advantage in a lot of ways, being much more of a mid-market software provider. It certainly helped in terms of propelling their growth in, say, the database space and systems management, but in terms of the private cloud and the cloud delivery, that's something that they are, going to either have to be forced to move up in the stack, look to arm some of their larger partners to be cloud providers, which is certainly part of the free cloud strategy that they're going forward with, but also, be ready when private cloud adoption and, some of the lighter weight options available for open up adoption beyond just the large enterprises to a broader segment of the market. We see that as one of the things that will eventually drive more opportunity and growth for Microsoft, but has been somewhat a hindrance for them in terms of targeting the near-term opportunity. So I think in terms of the path forward, how we see this landscape changing, certainly we see, VMware out in the lead, but vendors like Cisco, Microsoft, they're all adding to the portfolio, expanding the strategy. Certainly we think there's implications as Microsoft is able to build up that cloud ecosystem of developers and arm that ISV contingent to be cloud providers. and that could be a significant opportunity for them going forward. So those are all kind of changes that we see on the horizon. I think overall Cisco has a lot more complexity in terms of its cloud strategy just over the past 6 months, and that you'll see them really build out their presence being not just a hardware provider, but also a software provider as they look to really capitalize on the hybrid strategy that they've laid out going forward. So a lot to change in terms of the overall software landscape, but also the vendors that are playing within those different areas, we think we'll see significant change going forward.
Great. So with that, I think it's time to open up to questions. So thanks to those of you who have sent the questions through now. If you do have any questions, please do send them through so we can put them in the queue. So the first question we have, it's kind of a two-part question. Do you have any sizing on private cloud adoption by operating systems, VMware, Microsoft, OpenStack? I'm interested in understanding what types of private clouds people are building.
Yep. So when we looked at, as part of the private cloud study, we looked at the platforms and the operating systems that are being used, and also evaluated in the future. And I think, we did see, a lot of proprietary usage in the short term, but that, far and away, going forward, things like OpenStack, Cloud Foundry, those were all top of mind, more open source solutions going forward. So that was from a study that we wrapped up at the end of last year. And I think with the developments and additional commitments to OpenStack that have occurred over the past couple months, we expect to see that focus growing even more as you look at the platforms on which people are going to be building their private clouds and basing their development for applications going forward, that those platforms are going to have a significant impact on this space.
We have a question. We have a couple questions actually on slide 4, so I'm going to move us back there so you guys can all see what we're talking about. The first question we had is, in this chart, what is the growth for non-managed private cloud? Is that cloud component?
So, so we saw some of the market sizing data further on in the deck in terms of the size of that market. So it is for enterprises building their own environments, it is encapsulated in the private cloud component space. It's not an exclusive bucket, however. The public cloud assets are also in there, so it's not exclusive to that private built environment, but it is that is where you would see that represented.
So the next question we have is, are you including any professional services in the views of cloud components?
So we're not including professional services in the cloud component sizing. The way that we've set up the taxonomy, the cloud professional services bucket, which you see at a 41% growth rate, that's where we're including the self-built clouds, the consulting advisory, any of those professional services around cloud environments, whether it be public or private, are included in the cloud professional services segment.
Let me just move back to the question slide. The next question we have is, how does HP's agreement with Foxconn have an impact on this market?
So I think that we're going to start to see, perhaps as early as next year, HP having certainly a larger presence in the cloud service provider market based on its ability to develop lower cost servers that can compete with ODMs such as Quanta and Wistron and those others selling into those very, very large cloud data centers. I think that a lot of the value proposition for HP here is not only in that space, but outside of that space as well, among other cloud service providers that don't have these massive teams that the Googles and the Facebooks and the Amazons have, that do need some services wrapped around those large hyperscale deployments. That's what HP is going to be able to deliver that Quanta and Wistron and others can't and don't really need to, because they're doing just fine selling to those top-tier cloud providers. However, depending on how HP is able to innovate in the hyperscale space, for those types of servers. You know, when we look at Moonshot and ProLiant SL, we're looking at more off the shelf. But when we look at, you know, more custom engagements, if HP can, you know, use its heritage of innovation on the server side to do something significant on the hyperscale side as well, and, you know, this could all be about delivery. And HP's scale now, along with Foxconn, I do think that it's going to prove a major disruptor in that cloud service provider space.
Okay, we have another question that was slide specific, so let me go back there real quick. Slide 17 on growth leaders. When something grows, something else shrinks. Where is all this growth coming from?
So in regards to the software component slide, I think when you look at, you know, so the growth rates, they're all above pretty much all above the corporate average for these companies. So when you know, so there's overlap in terms of the cloud components are part of the representation for corporate growth. And so when you take that out, you know, it's even more distinct in terms of the non-cloud component software portions of the portfolio. There's an even more significant gap in terms of the packaging and the assets that are solely for cloud components versus, you know, other delivery methods, and that could be, you know, a variety of different areas. And so overall, I mean, we've seen the growth in traditionally delivered software slow down across the board. You know, it's exemplified by some of the providers like Symantec, CA, BMC, all, you know, going through tough times in terms of, you know, either flat, declining businesses, and that, you know, part of it is, you know, selling. It's not just the technology assets, it's who's buying within these organizations and the types of organizations that are purchasing. The purchasing centers have changed significantly, and I think that's where you see more of the shift in terms of the decline rather than just classes of technology. And I think this highlights more than ever that the catering to different needs within organizations and also, you know, looking to build out, sell into cloud service providers is critical in terms of sustaining and targeting any upside potential in terms of the traditional software market. Just as with the hardware assets, it's a consolidation of buying points more than ever that makes it critical to cater, you know, in a cloud-centric way to the delivery methods and the different types of customers. So I think you have seen a shift in, you know, emphasis and control away from the traditional software delivery to these cloud-enabled or cloud-enabling type solutions, and that's where you're seeing the big shift is that you can't just target the same customers you've sold to for decades. It's, you know, you really need to branch out and in order to target the growth that's being driven through the cloud component side.
Next question we have, is pricing impacted in a cloud versus traditional deployment scenario for hardware or software?
So I think just playing off the previous comments, when you look at you know, the differences in terms of selling into traditionally a customer that you know, has a non-IT business focus, you know, whether it's retail or you know, pharmaceuticals, IT is an enabler of that, and so there's more of a you know, CapEx type willingness to invest in CapEx to acquire assets and then to depreciate the value of them over time as you're operating your business. And that from a cloud provider, particularly an external cloud provider view, you know, the revenue dynamics and the working capital required to do that makes it much more difficult to make those large investments up front. And so just as the consumers of public cloud, you know, saw great benefit in terms of being able to shift that financial risk, do it over on an as-needed basis, the cloud providers, particularly as, you know, the masses, if you will, are enabled to be deliverers of cloud, they need those financial bridges to get started and to make that transition from a financial perspective. And so we certainly have seen more of a pay-as-you-use type model. HP, IBM have been proponents of that. Now we've even, SAP has changed its enterprise software pricing models. So, we see this upstream shift in terms of taking the financial responsibility for the upfront commitments, shifting it upstream, and I think that's going to continue to be a big part of enabling new cloud service providers to be successful and to make the transition in a way that doesn't kill them in the short term in terms of the CapEx involved.
Okay, we have a couple of questions that we're going to take offline. So we have one more question we're going to ask publicly. So if there's any additional questions anybody has up in the audience, please send it through now. Last question we have right now, guys, is do you see the required talent is out there to support development of OpenStack-based solutions within an organization? Is there a demand for professional services to deliver it?
I think with any new technology trend in the market, that kind of starts with a lot of, marketing, promotion. I think the large vendors, are getting there in terms of the skills to be able to deliver it within their own organization. We do see that gap in terms of for those new classes of cloud providers, the large enterprises, the ISVs, just don't have the internal skills today, but also don't have a lot of the resources to be able to spin up a team around this, invest in education and training. So as this becomes a more core component of cloud delivery going forward, I think part of it will evolve on its own, but in the short term to shorten the learning curve, we do see opportunity to come in and provide some of that assistance, provide training, education, and certainly that was part of HP's announcement around the Helion organization to be a provider of those services for their customers. In addition to the insurance and the indemnification, that was really one of the biggest takeaways for us is that they're going to be out there filling that gap, and we think others are going to follow suit in order to, there's been significant investments in this platform, and so making sure that organizations have the skills to take it forward is a big step in terms of broadening the acceptance and adoption of it. So we think it's in a lot of the biggest vendors' best interest to make sure that happens.
Okay, we had another question just come through. What are companies doing to fight the commoditization trend?
So I think that we're starting to see a couple of things on the hardware side. Certainly, so if we take a step back and look at the workloads deployed in a traditional data center, we see a little bit of splintering and almost server tiering, where we do see things like converged solutions being deployed for very particular workload workload requirements, and then the remaining workloads in those environments, yes, being deployed on an increased number of commoditized devices, server storage and increasingly networking as SDN, the presence of SDN continues to grow. I do think that there are still plenty of opportunities for very discrete solutions, but looking at commoditization as a whole, as the cloud influence continues to trickle into the enterprise space through both private clouds and hybrid clouds, there will be opportunities to sell hardware and, of course, software as well, but on the hardware side with commoditization, to sell hardware that plays right to those requirements, and that's on the hyperscale side, or even hyperscale-like components that take the best features of hyperscale hardware being used in those very large cloud environments. So hardware that's more simple, highly scalable, or at least somewhat scalable, and easy to manage. That's where we see enterprise customers moving with, especially in large data centers. So I don't think that there's a complete way to battle or hedge against commoditization. It's here. It's expanding. And customers realize that they can obtain the same benefits from almost any hardware out there, at least on the server side, because the platform is usually the same, Intel-based. But now we have more competition coming into the server space and the chip space with ARM. Customers know that there's going to be choice. So as vendors will have to differentiate to better compete as some of these choices grow and emerge in the market.
Yep. And I think the other coming at it from a little bit from the services side, but also some of the things that I've seen on the hardware side is that the best strategy from a vendor perspective sometimes is to go directly at the incumbent low-cost provider to head them off of the pass, if you will, in terms of matching on price. And you've seen Microsoft and Google do that with AWS. That in order to counter some of the low-cost commodity type solutions, you need to be able to provide that, but also know that customers, and this goes back to a lot of the outcomes-based research that we've done, the number of customers that will take just raw, off-the-shelf services, invest significant amounts of their own resources around them to really make it into a solution are few and far between, and that a lot of their growth is not petering out but leveling off, and that this solution focus where customers are willing to pay for additional value add that makes it relevant for their business, that decreases the amount of headcount they have to devote to different IT projects, that is the greater opportunity that we're seeing. And so that is good news in terms of vendors out there that really are investing in R&D and innovating and doing those things that you can't do when you're solely focused on providing a commodity solution at the lowest price. And so I think that's where the market is swinging back in their benefit in terms of really being able to differentiate the solutions, not just look at the price of it.
Great. So with that, it looks like we are at the top of our hour, so I'm going to wrap things up. A couple things that I wanted to share with you all. As I mentioned, we're going to share all the social media links with you, so I do encourage you to follow Alan and Christian on Twitter, as well as TBR. And we do actually have a cloud handle for Twitter that isn't listed here. I sent you all a note, but you can follow TBR Cloud at TBR Cloud and get insights into our research and what we're working on with that. Additionally, you can join our social media conversations on YouTube, SlideShare, and LinkedIn. There are groups as well as other presentations that you can get. We are actively putting together our next research agenda, or our next webinar schedule for next quarter. So we will be doing more cloud presentations both on our public cloud research as well as other special research streams. So do keep an eye out for that email that will be coming out over the next 2 weeks or so, and you can register for further webinars on this topic. Excuse me. As you're leaving the presentation, we have a quick survey. It's 3 questions. How valuable was the presentation? How good were the presenters? And if there's any other open-ended feedback you'd like to share with us to tell us, if there's topics that we should be covering in our research or feedback that we could have on our presentations. We are using that feedback to improve our presentations and bring more value to you quarter to quarter, so that feedback would be fantastic. I'm going to leave the chat function open for another couple of minutes in case there's anyone who would like to get last-minute questions through or set up additional conversations with any of the analysts here or learn more about our cloud research portfolio. And if we don't hear from you now, look forward to getting more information from us, our thought leadership pieces and webinar decks over the next couple of weeks. So thanks again, everyone, for your time today, and we look forward to supporting you as you go forward on your cloud journey. Have a great afternoon.